warm welcome to this very special interview on the Money Mile. Joining me today is one of India's most dynamic mutual fund leaders, Swarup Mohanty, who's the CEO at Mirae Asset Investment Managers, one of India's fastest growing mutual fund houses. Thanks very much, Swarup, for joining me here today. It's always a pleasure talking to you. Swarup, we've seen extreme volatility in the last few months, and given the sharp fall in the equity markets, we've seen a fair amount, though as far as April was concerned, the numbers still looked fairly robust when it came to SIPs. But are you seeing people redeeming at this point of time? And if they are, what would you tell them to do? Because again, from a long-term perspective, does it make sense to just continue your SIPs rather than redeem it in panic and fear?
Fundamentally, an SIP starts with a purpose, and there is a certain path for which the SIP has been started with at the beginning of it. Stopping an SIP would be deviating from the path. That is, I think, something which people have to understand. The second path is, I do agree that a lot of people check with us and say, can we stop it and come back? That is timing the market, which is near impossible. I'll just give you an example, which all of us sort of went through. They say, when the last time there was this kind of a fluctuation was in 2008, when the markets had gone down nearly 50%. And it was probably the first experience of SIP investors to this kind of volatility. And at that point of time, let me tell you, nearly 60% of the industry SIPs had stopped. Contrast that to the behavior now, and that's why I feel people are behaving far in a superior manner than they did in 2008. But if you take that actual volatile period between June 2008 and July 2009, and that's when most of the SIPs stopped. And then if you would have stayed invested in that period from, say, April 2008 till now, that accumulation of that units at that price would have added nearly 0.8 XIRR to the returns of the investor. And then that's what this concept of SIP is. It brings out in such times the biggest advantage of SIP, which is the rupee cost averaging. Let's face it, some of the units you are collecting now are at 20% or probably 30% cheaper than what you were collecting in December. And at that point of time, this thought did not even cross anybody's mind. So again, I bring back my basic thought that these times are probably the best times for an SIP investor. Stay invested and see this entire ride through. Actually, this accumulation of units at these prices augurs very well for your wealth creation chances on the end of COVID-19. And when markets stabilize, and then that's what has been the result of 2008-9. I mean, people who stayed till 2011-12 not only got back their entire principal, but almost doubled their returns in just 2-3 years from there, because that's how the market came back. I'm not saying the market will come back that way, but when things stabilize, this accumulation of units will really hold very favorably for investors in the long run. So I would say you add or don't add, that's up to you. But please don't stop your SIP. These are very good times for you as an SIP investor. In fact, I want this period to be extended a bit more so that I can accumulate more units in my SIPs in various funds.
Thanks very much, Swarup, for joining me for this interview, and hopefully things will get better soon. Thank you once again for joining me.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.